Hey guys, welcome back. Last week I talked about shorting Tesla because I felt that Tesla is getting overvalued. And then this happened. So how did I know? Two reasons. Elon have to sell his shares to pay for his taxes. Second reason, there was low demand for the bond market, which we can use to gauge the overall investor sentiment, both retail and institutional. When everybody is confident and greedy, I will be fearful. So today, let me be the guinea pig and try to attempt to short Tesla. And if I fail my short on Tesla, we all learn something from this. Let's understand why I see an opportunity to short Tesla. We first take a look at TLT, the 20 years treasury bond. The bond market can reflect an investor's sentiment. When general sentiment is fearful, everybody is scared to invest, money will go to the bond market as a flight to safety. The bond market has an inverse relationship versus the general market. We look at where the pandemic started, from February 2020 to March 2020. There was a huge demand and surge in price because it is a flight to safety. Subsequently, when the market recovers, it becomes greedy and everything becomes overvalued. Then in April to May of 2021, we experienced correction, and now currently in November 2021, we are back to all-time highs again. To make it simple for you guys to understand, we can tell where the market sentiment is using TLT. The higher the TLT price is, the higher the demand. It represents fear in the market. And vice versa, the lower the price, the lower the demand. This means that investors are confident and greedy with the economy. We can tell from the current TLT that we are approaching a quite confident and greedy market. So I'm a contrarian. If people are extremely greedy, I'll be on the opposite end and be fearful. Moreover, Elon Musk has a 10 billion tax bill that you have to pay by selling his Tesla shares. Unfortunately, I did not manage to buy the put option because I didn't think the risk to reward ratio is good. Nonetheless, these are the trades I have set up. Pause if you need to. I dollar cost average on Tesla, sold Tesla put option, and bought Palantir call options. In times like this, you have to keep your margin low and be level-headed. So begin with the end in mind. Ask yourself, where do you project Tesla to be at a year later? If you feel that the current valuation is cheap, then stick to it. Your portfolio may look red and you may seem stupid, but trust me, you'll be fine after that. I'm slowly buying and adding into Palantir, building up conviction as I go. All I can say now is data is the new oil, and only Palantir right now has the ability to extract, analyze and make sense of the massive oil. Their ability to scale remains unclear to me, but it is still skewed towards a good possibility that they can scale. I'll let you guys know as I look deeper into Foundry, Apollo and Gotham. Today, the objective of this video is to build your conviction on Tesla. Let me reiterate on Tesla and why Tesla will be the biggest company stock. Tesla is a fixed cost business. The factories are fixed cost. The full self-driving software is fixed cost. How much cars can be produced is constantly being improved through streamlined production, combining all 79 parts into one single alloy. Each gigafactory they build, they correct the mistakes previously and constantly find ways to improve their production capacity. Listen here, Tesla have two vertical integration of both the cars and the batteries. For batteries, they need as much as they can, produce in-house and from suppliers. There's no limit because all the batteries can be put into good use. The batteries can be vertically integrated and priority will be given to the highest profit margin. So batteries will be given priority in this order. So Tesla Robotaxi fleet, high margin cars like Model S with full self-driving, Model Y with full self-driving, normal model like Y and 3, and the remaining batteries for energy storage, because it is the least profitable. For cars, the current situation is the demand is more than what Tesla can supply. Even if the day comes when Tesla can produce more than its demand, the excess cars can be used for making Robotaxi fleet, which is actually the most profitable market. Because the Robotaxi is operated with no driver, no petrol, minimum maintenance, yet it can run all day as compared to a normal driver. Operating a Robotaxi fleet is actually much profitable than selling cars to other people. So imagine yourself as a manufacturing factory owner, and I tell you that you can produce as much as you possibly can, and each unit you produce is a profit. You'll be the happiest factory owner, and this is exactly what is happening to Tesla. So these are the other things I would like to include. Tesla will be the world #1 in manufacturing. We count it by per cubic meter and who is the most efficient and most useful using that cubic meter. When you are super efficient, you bring down the cost, and Tesla's speed of manufacturing an EV is 3 times faster than Volkswagen. Tesla takes 10 hours to produce a Model 3 and Volkswagen takes 30 hours to produce an EV. So getting to the highest volume of car produced is a matter of time. So let's piece the puzzles together. Gross profit margin of Tesla is 3 times more than legacy automaker. They manufacture 3 times faster than Europe's best automaker company. So when they are able to scale volume production, and they are 3 times more profitable and 3 times faster than other car companies, in the same amount of time, they will be 9 times more profitable than a typical automaker. So this is not including their 4680 battery, which can reduce their own battery cost by 69%. And battery is the most expensive raw material when it comes to producing an EV. So you can imagine an EV like a mobile phone. When there is 4680, the profit margin of producing Tesla cars will be even more profitable. 4680 has much more capabilities and range. It gives Tesla cheaper ways to manufacture big vehicles like semi and scale their energy segment. The more vehicle they sell, the more Tesla insurance will be sold. It is cheaper to insure with Tesla because they're the safest car in the world. They also collect data from Tesla drivers' behavior and charge accordingly. So in the future, the more market share Tesla take, the more insurance revenue they have. So this is why I emphasize vehicle delivery growth is the most important for Tesla. Full self-driving is also a fixed cost business. The more vehicles sold, the more software revenue they have. Full self-driving is the most expensive software revenue to be sold to a normal consumer. So full self-driving also enables robotaxi. And why robotaxi? So let me ask you this question. What are the 3 most expensive costs of a taxi? It is first having a human driver, using expensive petrol, and having an engine that you constantly have to do maintenance. So without these 3 costs, robotaxi can charge cheaper. So instead of charging $30 for long distance travel, the price can be cut 40% and becomes $18 for example. If price for a ride with robotaxi is $18, demand for taxi transportation will increase too. If price for a ride with robotaxi is $18, demand for taxi transportation will increase too. The most mind-boggling part is that all this is automated. Tesla will have driver partners and at the same time having their own robotaxi fleet. And this robotaxi fleet will run around and bring Tesla additional revenue. A human driver will become tired after driving for 12 hours. A robotaxi on the other hand can operate for 24 hours. To solve full self-driving, Tesla is solving AGI, also known as Artificial General Intelligence. It is for AI to map out our real world, to figure out physical obstruction and how to navigate our real world. And then we vertically integrate again. The AGI training complements Tesla Bot. Tesla Bot meets AGI to make sense of our real world, and they will be powered by the most efficient and powerful battery that Tesla will have the ability to make. Tesla Bot can disrupt trillions of property industry. So imagine an Amazon worker that packs goods in a warehouse. He is paid around $40,000 a year. He will be entitled to bonus, public holiday. He can only work an average of 10 hours a day. He will be entitled to 2 days off per week. A Tesla Bot does not need to be paid bonus or entitled to public holiday off. Tesla Bot can work at least 22 hours a day. If you factor in 2 hours of charging, they can work 7 days a week for the entire year. And what if Tesla Bot is much more efficient and 3 times more productive as compared to a human worker? So if that is the case, they will be able to bring in 9.6 times more work value than a human in a year. So if a human is paid $40,000 for this amount of work, then in theory, Tesla Bot should be paid an estimated salary of $384,000. But guess what? You don't have to pay Tesla Bot to produce this amount of output. Then we ask ourselves, how much should Tesla charge for selling their Tesla Bot? It will most likely bring Tesla a lot more profits than we can imagine. So to summarize all this, Tesla is world number 1 in manufacturing. Tesla have multiple fixed cost business, batteries, cars, full self-driving. Tesla have multiple vertical integration, 4680 batteries to reduce cost of producing an EV, gigacasting, full self-driving into robotaxi, 4680 for semis and energy segment. AGI and batteries into Tesla Bot. Tesla Insurance might make 30 to 40% revenue of their car business. Their supercharger network will bring in more revenue and replace all petrol stations. And most importantly, they will have monopoly on the charging stations. So for all that, I'll keep adding Tesla shares when I have additional cash. Will you? Let me know in the comments below. I hope you enjoyed me putting all these puzzles together for you. If you want to support this channel, don't forget to subscribe to my channel. Thank you. I'll see you next week.